guys, a very good afternoon to all the viewers of Money Control. I'm Karunya Rao, and as promised, our coverage continues on our YouTube, website and social media handles. Today, we'll be talking to Prashant Khemka of White Oak Capital, Gautam Duggad of Motilal Oswal, along with my colleague Ghulam Jilani and Gaurav Chaudhary. Guys, thank you so much for touching base. Before we head on to Gautam and Prashant to talk about the markets, Jilani, I'd like to come to you. Clearly, we know the results by now, the numbers by now for different states and the kind of majority that BJP is coming back with, the big AAP victory as well. What are you picking up from the street? How is it being received?
See, it is on the expected lines, except for Goa, which was predicted to be a hung assembly by exit polls. But yes, it is. If you look at AAP's victory in Punjab, it is unprecedented in the sense that first time a regional party is in power, is going to be in power in two states, which is Delhi and which is the other is Punjab. And for UP also, it is unprecedented in the sense, as I said, as we know that it will be first time, I think in 30, 40 odd years, that a chief minister of a party who has completed 5 terms will return to power, right? So we had in UP, for Punjab, we can say that people wanted change. There was anti-incumbency, and Punjab has always voted for a change. But it is unprecedented in UP in the sense that we had issues on the ground, which were evident on the ground. Issues like unemployment, issues like COVID mismanagement, especially in the second wave. Issues like price rise, issues like other issues were there. There was I was just before coming to the show, I was writing about Lakhimpur Kheri. We saw Lakhimpur Kheri was one of the biggest issues in recent time, which opposition talked about. And turns out that Bharatiya Janata Party, the BJP, has won all the 8 seats in Lakhimpur district. So this shows the level of reach, the level of sweep or a wave that BJP is enjoying in UP. And the reason for this is that there might be there are issues on the ground, but all the issues on the ground that were present on the ground were overpowered by Narendra Modi government's central policies and the delivery on the ground.
Right.
So that is. Yeah.
I also want to get in, Gaurav, analysts are saying that the impact and the exuberance of the elections will be short-lived. Of course, we have larger developments to watch out for on the geopolitical front, on the inflation side, etc. Crude oil prices are on a rise. Yes, they've cooled off a tad, but still remain a concern. So what is it that you would like to add, I mean, given the way the markets behaved today?
Yeah, a couple of things. First, on the election results itself, and as Jilani pointed out, it's an unprecedented victory. But there are lots of sub-stories within the election results. The first sub-story, obviously, is the emergence of Arvind Kejriwal as the national leader. And as we had discussed this in the morning, Aam Aadmi Party is effectively only a 7-year-old party. They've been in power for 7 years. And they have left most of the legacy political parties, as it were, like the TMC or the NCP, etc., far behind, and gone on to win a major politically important state, a border state, which have voted for a kind of an upstart party ahead of established parties like the Congress and the Akali Dal. That is one sub-story. But the second sub-story is also the decimation of Congress in all of these states, which is something that the party will have to introspect long, deep, and hard. The other sub-story, obviously, is emerging from Uttar Pradesh, is the decimation of BSP. And what does it mean for BSP's future in Uttar Pradesh is something that we'll get to know over the next couple of months, because does it mean that Mayawati, does it signal the end of Mayawati as a potent political force or the potent political influencer in India's biggest and most politically important state, is something that's going to have a bearing on which way the winds will blow in 2024. The other thing, of course, is that each of the 4 states that the BJP were defending, they have defended. It includes Uttar Pradesh, it includes Uttarakhand, it includes Manipur, and it includes Goa. But also look at, there is another story that has emerged from all of this. 6 months ago, there was a change of chief ministership or change of chief minister in Punjab. by the Congress, and Congress lost elections badly. 9 months ago, there was a change of 2 chief ministers in Uttarakhand, and BJP went on to register a very handsome victory. So it tells you about how the two parties actually approach elections. BJP approaches election as if their life depends on it. The Congress approaches elections as if it is a 5-year project. It is not a 5-year project. BJP looks 25 years ahead. Congress looks only for the immediate term. And that is what has made the difference. And as we discussed in the morning also, tomorrow the Prime Minister is addressing a rally in Gujarat. That is all scheduled.
Right.
Effectively, the Prime Minister is going to sound the poll bugle in Gujarat that goes to polls in the end of this year.
Yeah.
The Congress, which was a potent force last time around, is nowhere to be seen on the ground this time. So there's a lot of introspection that the party will have to do. On the economic front, however, each of the parties that have been voted to power, some of them retaining power, and someone like Aam Aadmi Party that has won power for the first time in a big state, inflation is something that they have to deal with immediately. That getting by is going to get harder. It's not going to get easier. For one, of course, the crude prices are rising there, and we haven't seen, because of elections, petrol and diesel prices hasn't risen for the last 4 to 6 weeks. They're going to rise anytime soon, maybe from tonight, maybe from tomorrow.
Yeah.
What happens then, and how do these parties, how do these newly elected chief ministers, some of them returning to power and some of them coming to power for the first time, going to deal with this? Because this is something that affects everyone. The kind of unrest, or the kind of, the rest, how are they going to deal with a restive populace that is going to demand answers from a question, because a lot of expectations are riding on each of the parties that have been voted to power. They have to live up to those expectations, and extremely fast.
I want to bring in Prashant into the conversation. Prashant, given the state of the economy, inflation concerns which are looming very large, and we are looking at massive price hikes across the board, especially fuel prices, which could be as soon as tonight. What is it that is in store for the markets over the next few months? Because the retail investors seem to be very perturbed, very concerned. Many of them have seen something like this for the first time in their lifetime.
Certainly. Thanks, Karunya, for having me on the show here. Susie, it's very difficult to say, because these events, while important, have a limited impact in terms of the long-term value, of the companies in the market. So the inflation, if I talk particularly about, as long as it is a transitory, as long as market believes it is transitory, it is not going to have any material, if at all, impact on the markets. If it is transitory because of certain supply chain disruptions in commodities, because of the geopolitical situation, or prior to that, because we're still recovering from the supply chain disruptions of COVID, and now this geopolitical situation is further impacted. But as long as, the inflation expectations don't get entrenched, and inflation expectations getting entrenched would be captured by bond yields longer term globally. As long as those remain at and as you've seen over the last 6-12 months, while the shorter end of the bond yields has gone higher, the US 2-year, 5-year, and even 10-year, but the longer year horizon bond yield has not moved that high, which suggests to me that inflation expectation still remain contained for the longer term. It is the near term, or the next year, 2 years, that inflation might get elevated, but that is not that detrimental or is not something that can trigger a massive correction or a bear market or a sharp pullback in the market, would be my view. The election results, sorry.
Go on.
No, the election results are something that we were keenly awaiting, and I think market was as well. Market generally prefers stability and continuity. When I mean stability and continuity, it's more at the central level. So for the last nearly 8 years, market is used to a certain policy direction, implementation, and so on. So to the extent that the election results, state election results, strengthen the potential for continuity over the coming many years. To that extent, it is definitely positive to the market sentiment, like it was 5 years ago in 2017 when election results came out, I believe on the day of Holi, March 11th. The undertone became very firm following that.
Yeah.
And that was not because of the election results of UP per se, but it was the extrapolation by the market of what it meant potentially for the 2019 central elections. And hence a stronger showing in several of the states by BJP to the extent that market interprets that as increasing the probability of continuity in 2024 is supportive of a firmer undertone.
But is the worry about inflation, worry about earnings in the near to medium term, is it all factored in by the markets already?
See, I do believe so. Market factors in these things well before we start worrying about them. It's no different right now, I would say.
Okay.
Most companies are able to, pass on the inflation in raw materials with some lead or lag time. Yes, it does have some dampening on the overall demand, but it's not something that is a lasting effect. That's why whether on a sustained basis inflation expectations have changed is important to understand, which doesn't seem to be the case.
Gautam, how are you looking at the earnings trajectory? We're almost at the end of Q4 of this financial year. Given the relentless spike in commodities across the board, in all kinds of raw materials, how do you see earnings playing out, not only in Q4, but for the next couple of quarters as well?
Good afternoon, Karunya. Thanks for having me here. See, basically, last 6 to 9 months, we've seen a lot of headwinds in this market. You had seen second wave in April, May. Then we had seen supply chain disruptions. Then third wave, localized lockdowns. The market has taken a lot of hitting. But despite that, the earnings have been extremely resilient. If you look at the first 9 months FY22 earnings, Nifty earnings are up 45%. More importantly, the forward revision, when we ended the quarter 15 days back and did our review, the earnings have been extremely stable. And even now, over the last 4 days, my research team has published notes on several sectors where they've made changes to the estimates factoring in current commodity prices. So we've cut estimates in auto, we've cut in cements, we've cut in consumer, and we've raised estimates in metals and oil and gas. All of this put together, at the Nifty level, there is not much change. We're still at 736 rupees of EPS for FY22, 875 for FY23, and about 1,000 rupees for FY24. So not for a moment I'm trivializing this commodity inflation. The real reason is the way Nifty is composition today. There are many counterbalancing forces. There is 15% of Nifty profit pool which actually benefits from higher commodity prices. And there is 45 to 50% of Nifty profit pool which has no impact from the higher commodity prices whatsoever, which is basically financials and IT. There is no direct impact. This is 1/3 of profit pool, which is consumer durables, auto and cement, which gets impacted. So that is where we have seen earnings cut. The real impact happens outside of the Nifty, the broader markets, where the pricing power sometimes is low, where the impact of commodity cost is much higher, and which is what we witnessed in the third quarter as well, where a variety of sectors saw 200 to 600 basis point of gross margin contraction. And we have seen for the first time after 3 quarters, earnings downgrades overweighing earnings upgrades by a factor of 1.5 times. Having said all of this, I think after today's election, the market has one less headache to worry about. As Prashant pointed out, this is a very good outcome from a market's point of view, stability, continuity in policy momentum, and hopefully this will augur very well for further reforms push. We have seen some pullback on farm laws. So, this kind of results does bolster the confidence of the incumbent in pursuing the reforms agenda. So that augurs very well for the market. And of course, the fact that the margin of the victory is so huge, and this is the first time that an incumbent CM is coming back in UP after 3 decades. This will augur very well for 2024 for them. That will give them confidence to push the policy.
Gautam, you've told us about the cuts that you've made across different baskets, but where are you betting on? What are the segments or pockets of the market that you like right now?
So for last 2 years running, Karunya, we have had a big positive overweight call on IT, which is continuing. We have the single largest overweight on IT with about 300 basis point overweight. And I think IT is one of the best positioned sector in today's environment. The demand visibility is excellent. The cash flow generation is massive and humongous. And 90% of that cash flow is being returned to the shareholders through dividend payouts or buybacks, right? And free cash flow conversion is also 100% plus. So combination of this 3-4 characteristics makes IT very resilient. And that is why you have not seen much fall in IT actually. So if you're looking for something which has gone beaten down, then IT is not the space to hunt into. But on an absolute basis, we continue to like IT. Second sector which we like and which has not worked actually is financials, where we have another 300 basis point of an overweight. But I'm not too bothered at the moment because the fundamentals have been very strong. If you look at the earnings, this is the only sector which saw an earnings upgrade in third quarter. And we are heavily biased in favor of large cap financials because their balance sheet is very strong right now, with provisioning coverage ratio of 75-80% plus and capitalization ratio on tier 1 of upwards of 15%.
Large cap banks is clearly a theme that, a lot of our experts that we've chatted with today are betting on.
Yeah, valuations are also reasonable there. And then third, something which I've been always biased towards, given my own, experience as a consumer analyst, I continue to like consumption, though I'm a little more biased towards discretionary because there is a K-shaped kind of a scenario panning out on consumption where low-end, rural-oriented staples items are facing the volume pressure and also the headwinds of input cost, whereas the high-end urban-facing discretionary high-ticket goods, they are in a different trajectory. Paints, adhesives, QSR, jewelry has been one of our most high conviction theme for last 7-8 years. So we continue to like tighten even now.
Gautam, I'd like to also get in your view on metals because they have been very affected by the recent commodity price rise. Of course, a lot of other users of different commodities are also hit, but metals pack, the non-producers, the users, how are they likely to perform in the near term, near to medium term perhaps?
See, near term looks good because of the underlying commodity prices, but one shouldn't make the mistake of extrapolating current prices because we are seeing last 3-4 days, every day the prices are up 2-3%. You cannot extrapolate that and then, mark to market your earnings to the new commodity prices. So in times like this, when volatility is very high, in the past when metals were making losses, we never looked at the PE or EV/EBITDA. We used to look at price to book. So I think today also when the scenario has shifted to the other side on the extreme, I think it is better to look at price to book in some of these cases. While we like metals, we have an overweight, but at these prices, I will stay a little more cautious because the moment commodity price momentum tapers off, the earnings momentum will also slacken and the prices will react. We've had Hindalco, we've had SAIL in our model portfolio. We have seen 3-4 rounds of earnings upgrade. The last upgrade we saw was in September. Since then, the commodity price momentum had slackened and therefore we have not seen any more earnings upgrade after September. Now again, because of the recent events, the prices are up. So we have seen one more round of earnings upgrade. But I think market will look beyond the near term. This prices clearly, in my view at least, in the near term, they might be high, but it's not looking very sustainable, whether it is oil or other commodity basket. So I'll be very cautious now. We've had an overweight, but at this prices, I will reassess the thesis again.
Prashant, one question to you, which has come in from one of our audience as well. Why are the markets going up, and why isn't the street worried about the soaring oil prices? Yes, there has been a cool off, but the way the markets have played out in the last 3-4 sessions, the exuberance and excitement that we've seen, what explains that? And will it continue, more importantly?
Certainly. So Karunya, I think this is always, the dilemma in investors' mind, and not only someone in the audience as layperson, but also amongst the sell side, buy side, whether it's on Gautam's side or our side. When it happened last time, if you remember, when markets bottomed about 2 years ago on March 23rd, right? On March 23rd, I believe the total COVID death count in India was in single digits. Not in thousands, single digits as in 5 or 6. And the case count was something like 70, 80. And markets then started rallying. And for the next 6 months, everyone, I think in public media as well as amongst investors and all, kept scratching their heads, why are markets so euphoric when the infection is spreading widely? The case counts are first wave, second wave, third wave, all these case counts climbing up, death counts globally were climbing up. And lockdowns were on a sequential basis being employed and lifted. So market has this ability to look through the near-term fog or haziness and beyond it, where the future lies. Whereas we as individuals, investors, and other market participants, we tend to try and correlate what's the fogginess in the near term with the market's trajectory. And that's why I think when market is, rallying and it's still down 5% for the year, but market is not going to wait before it assumes its movement in either direction. Market is not going to wait till you and I become comfortable or investors at large become comfortable with the surrounding, what is going on in our environment. The market's not going to wait for the war to stop. Market would anticipate well ahead of the actual stoppage of war. Market's not going to wait till inflation cools down. Market would anticipate, and we have to take our cue from the market rather than other way around, I would say. And as Gautam pointed out just a few minutes ago, very rightly, if you look at the market earnings profile today, 15% actually gets helped by this commodity inflation. As he said, half of it probably doesn't get affected, so that's 2/3. And the 1/3 also, that is consumption, that has near-term cuts possibly in earnings. But these guys with a lag are able to pass on the inflation. Okay. So next year earnings is not hit. In fact, again, as Gautam was pointing out, the smaller players, and he mentioned broader market, but beyond the listed market, there are so many small players in the unorganized sector. They suffer more during inflationary environment. At the expense, and at their expense, the larger players gain market share. So the larger consumer companies whose earnings may be a little bit under pressure in the near term because of inflationary RM pressure, right? Which anyways is going to get passed off in next year's earnings. They have a more structural market share gain benefit.
Right.
We've always been of the belief that inflation is good for consumer companies.
All
Very
right.
hit in the near term for larger gain in the long term.
Point taken then, gentlemen. Thank you so much for putting things in perspective and helping our viewers also understand, the various developments that are playing out simultaneously in the markets, not just elections. And Jilani and Gaurav, thank you to both of you as well for joining in with an update and analysis on what happened today as far as the election verdict is concerned. With that, we're going to wrap it up. Thank you so much for tuning in.